Let's do our call of the day. It's Chevron. It's upgraded today to a buy at HSBC. Analyst says that its underperformance versus its peers creates a buying opportunity. There it is, up 3%. Stephanie Link, you own it. So they cut the price target by a few bucks to 189 from 193. It's still 24% higher from here. Energy's been a big underperformer so far this year. What about this one from here?
Yeah, and you know, we talked about this last week. I actually added to it. Last week, it was down about 18% from its January high, and I just thought it was really extreme. This is a great diversified total revenue energy company, international company with upstream, downstream chemicals. And I think their E&P business, their upstream business, just got a whole heck of a lot better with this PDC deal that they announced yesterday. It will add 10% to proven reserves in the Permian, and you know that they have great assets in the Permian. About 9% of their total mix is Permian, so they're increasing that, which I like very much, and it adds about $1 billion to free cash flow. So I think at 11 times forward estimates and a $17.5 billion buyback with M&A now on their mind, I really like that a lot. So I'm going to continue to buy on these dips.
Jimmy, you still prefer Exxon to Chevron?
I do, because I'm in it, and I know that's not the solid answer that you like to hear, Scott, but the thing is I look at these two as twin giants, and I think you got to own one or the other, or both of them. Now, I choose only one because I like to run a concentrated portfolio. But Stephanie hit on something. This deal that Chevron did with PDC shows why you want to be in the bigger integrated oil companies, because they have the balance sheet capacity to do deals, which is going to be important in the years to come as supply is constrained, not just in the Permian, where you're seeing well productivity decline, but around the world, where you're going to have to drill in more expensive places like harsh environment off water. You're going to need that balance sheet capacity of either an ExxonMobil or a Chevron. I've been in Exxon for 3 years. It's been very good to me, so I'm not going to switch horses now.
Steph, you know, I think I generally find that it's either or for people. I don't feel like we have too many people who come on and say, you know, I own both and make the case for both. Is it a one or the other trade?
Well, they're the two largest companies in the ETF, right? So if you want energy exposure, you're going to own one or the other, or you own the ETF and you own both, right? So for me, I just kind of like to diversify within energy. So I've got the big one, right, with Chevron, kind of steady Eddie, if you will, less beta. And then I kind of work around it with something like a Diamondback, which has a lot of juice, a lot of beta to it. But I like the E&P cycle very much. I like what they have to offer, and the stock is extremely cheap. And then Schlumberger, you know, I feel like I talk about it every week. I really do like it, and it is this little technology gem within the energy oil field services industry. And we haven't even seen international activity pick up just yet. We're at the inflection point, and I think they have pricing power as a result. So I kind of like to just do this whole barbell thing and this mix of diversification within energy, but I can't really turn down, Exxon. I know Jimmy, I know why he owns it. It's a quality company, get a good yield, and they're also very diversified as well.
You go IEO, Josh.
Yeah, so if you think there are deals to be had, a lot of the companies that make up the IEO ETF are going to be the prey if Chevron and Exxon and companies of that size are the predators. So I think both can do well. I don't think you necessarily want to be a size queen in in energy stocks in general, because the larger ones are more integrated, more hedged, maybe less directionally involved with whatever's going on with oil that day. The smaller ones, they tend to trade more specifically on either oil prices or natural gas prices or barrels per day demand or whatever metric is moving the market. So I think you want to do some combination of the two. I just think IEO has more potential upside right now.